everybody, and welcome to the Open eCrime Market Commentary for the week of October 14th. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look at what's on tap for the markets this week and what kind of economic news will be released this week related to the economic shutdown here in the U.S. So as we take a look at the U.S. Futures market here on the S&P 500, looking at the ES contract, as we've been talking about, really been a headline-driven market here for quite a number of weeks here, and just recently with the U.S. government shutdown and what's going to happen with that, and some meetings were announced last week between Democrats and Republicans. Market got down to right around that, had a level here right around 1649, broke right down through that down to around 1640. Got an announcement of those meetings happening, and then the market just shot up in anticipation of government getting back to a working scenario, and that's kind of what this rally is about. So it's not really something that is all that trustworthy. If they don't get to a resolution, then more than likely the market goes back down, and if they do get to a resolution, the market may shoot up and then potentially might get sold off as well. So either way, I don't see a whole lot of upside here to this market this week. The 17th seems to be the cutoff date, although lawmakers can pretty much do whatever they want with some of those dates, and there isn't anything necessarily that has to happen on the 17th that'll cause some major issue, but the markets may react to that. So for this week, really just kind of sitting tight and maybe looking for some short-term opportunities, some intraday trading, working with some of the lower time frames, keeping our risk small in anticipation of news coming out. So there will be senators and Congress people meeting together throughout the week, and so headlines are going to come out that are going to be unannounced that can interrupt some of the trades that we have going on. So I'm just going to try to keep some of my trades short on an intraday basis and not really looking for any swing positions necessarily, since there's no way to predict what's going to happen here. But just in getting to the charts, nothing new really here on the monthly chart, but as we go down to the weekly chart, we finally have this. So we had a bullish candle set up here, and we were looking for the break of the high of that candle last week before we got a break of the low, and we got the break of the low first, and then basically pulled back, very similar to what happened in these some of these previous scenarios. Always got to pull back a little bit beyond that 20 period moving average. Got the same thing here, and then on some news, basically got the break up, put in a fairly large bullish candle right in and around that buy zone. So normally we'd be looking to take the looking to be long going into the break of this setup candle, but it's very difficult to do this week with all the news and the headlines coming out with the U.S. government. So really gonna have to bide our time this week. In looking at some of the lower time frame charts, like the daily, we can see that that huge rally up basically broke through that 1695 level, and then had a big pullback off of that of about 10 points or so, right back down to this 1680 level. You can see pretty clearly on the 480-minute chart. So really isn't any reason right here to begin to start getting long again. There may be a technical setup. We're certainly going to have a gap in the morning when the market opens up, provided we don't get a close of that beforehand. But the gap is going to be there right at the close 1700 from where it is now. So you almost have a 14-point gap on the S&P, which is fairly significant. So that's kind of what things are looking like going into the week here. We'll know a little bit more as we get into Tuesday, Wednesday, and Thursday on what's going to happen with Congress and all that. So pretty hard to predict what's going on. There are better days to trade than when you're anticipating news. We also have earnings announcements coming out in the full spectrum this week, and that'll be ongoing for the next coming weeks. So we'll just have to wait and see what's going to happen for the markets. Very tough to call. The markets they look like they're setting up technically, but there was a technical place for this bounce. There was a support level, but it was basically a fundamental move based on the first meeting of Democrats and Republicans coming together and trying to resolve the government shutdown issue. So that's kind of what the market movements have been around. And when you think about it, it doesn't make a whole lot of sense that you get this huge rally just on news that the government's going to reopen. I mean, first of all, what caused all the problems here in terms of the fact that we had a 4-year run. We're at a new high. We've got some weakening divergence on the charts and some things like that. If we get back up to the high here of 726, 1726, more than likely we're going to see some divergence here on the daily chart. We'll have it on the weekly, and we'll have to see what things look like on the 480. But things are setting up for a deeper pullback, and that's more than likely what might get a deeper pullback here on the monthly chart and getting us back into that probably the most significant level here, which would be the 1530 level on the monthly chart. And then that would put us right back into the buy zone on the monthly chart as well. And so at some point we're going to get that. We just haven't had that in the last year. And so we're long overdue for that. But it's anybody's guess as if it's going to happen now or later. So we'll just have to wait and see and at least get some of this major pieces of news out of the way. And then we can start to look for some more technical ways to trade this market going forward. And then taking a look at the small cap index here on the Russell 2000, fairly bullish candle there in the middle of the month here in October on the Russell. Still have some overextension there from the moving averages on the weekly chart. We still have that 860 level, which looks to be the one of the most reasonable pullback levels, even though it's a very long ways away. That would still put us right back into the buy zone on the monthly chart on a pullback here. And we're still going to remain bullish. That's going to be, if we do get that pullback, that's going to be maybe several months of a pullback. It's going to be pretty scary, but when we get back into this level, it's basically going to be more than likely a pullback on the monthly chart. So long term, we're still bullish. It's a matter of what's going to happen here in the short term. And looking at a nice bullish candle here in the buy zone, a very big candle though. So being that the break of the high of that is basically right back up to almost the most recent high. Let's get a little more precise with that. The high here is 1083.80, and the high that we put in is 1086.80. So you're almost right back to the high with that candle. So not an ideal candle there on the weekly chart to be trading technically. Again, fundamental moves here based on the on the economic situation here and the government situation here in the U.S. And you can see here we had a break of this flat level here, but not by much. Got rejected, and now we're back up now. Looking like we're going to put in maybe a second touch at that level right there, which will put in some significant divergence on the daily chart, which is not good. That's another weakening pattern of a weaker trend. We can see that a little better here on the 480 chart. So, and just looking at the on the small cap stocks, they don't look much different than the large cap index, the S&P. So once again, in looking at these trends, people have been long these trends and been buying the pullbacks now for 4 years. And so even though we are at a new high, it's still going to take a long time for these markets to turn around. People will continue to buy the dips, and more than likely it'll take a while for this market to top out, set up some kind of a reversal pattern, if that's going to be the case at this point, to then roll over. So the idea here is we still want to remain bullish this market based on the trends of these higher time frames. We just want to look for the opportune times to do that. And obviously this week, with all the news coming out, is just not necessarily the week to do that. So we can look for some shorter term trades here down on some of the lower time frames. I'll be looking down on the 120 minute and lower, down to the 60, the 30, the 15, the 5, the 1 and 2 minute charts, and just looking for some small trades. Simply means that the candles here are smaller, which means my risk is smaller, and I can still trade with the trend. I can still trade, the opening gap in the morning, and still look for a move potentially back up to that 1700 level, just depending. But I'm going to keep my trades for the most part short term and look for some opportunities to trade intraday, not necessarily hold a swing position or hold overnight, since there's just a risk of having news come out that can get you stopped out. So that's really what the plan is for this week, and that's what the small caps look like for the couple days coming. Then wrapping up here with a look at crude oil, really just a sideways consolidation here for the last couple of years in and around this level between 112 and then all the way down at this level down around 76 and also around 85 in a series of touches most recently. And also most recently you see this uptrend here. For the most part, swing highs, swing lows, swing highs. Looks like we're putting in a swing low right here around that 100 level. And then if we look at the the daily chart, we can see things are rolled over here with the 50, the 20, and the 10. But it looks like we're getting in a little reversal pattern right here, and that shows up a little bit better on the 480 chart, where we can see some divergence. And we have basically kind of a flat level setting up right here, looking like it's going to break in the direction of the trend moving downwards. And then we get this rejection candle right here. And so one strategy set up here is to take the break of the high of this candle right here with the stop below the low. And then we're looking to play off of this divergence, potentially looking to get at least back up into this level right around 104. And as we look at some of the lower time frames, that we can get that same setup here on the 240. So the 480 and the 240 look pretty good for that reversal setup. Nice reversal pattern. Again, got that rejection candle, and looking at the break of the high of that candle right around 102, and then looking for that move back up to the top of this consolidation, which is right up around that 104 level. So it looks fairly probable that could happen here this week. Looking at crude oil, and it looks like a fairly decent reversal trade. Obviously, with the counter trend trades, not as reliable as trading with the trend, but being that we're in a consolidation pattern here on the highest time frame, we're in an uptrend on the next higher time frame, the weekly chart. It looks very probable that we can get that move and a pretty nice reversal, if not to at least the 104 level, potentially back up to some of these levels like possibly even 108. So that's what things look like on crude oil for the week. And so there's the wrap up for the week on a couple of markets, the U.S. indices and oil. I'd like to thank you all for watching the Open Equine Market Commentary for the week of October 14th, and we look forward to speaking to you next week on the Market Update.